You've probably heard the phrase buy assets, not liabilities, so many times it's lost all meaning. But here's the uncomfortable truth. The wealthy aren't just buying assets, they're stacking a very specific set that quietly prints money for them in the background, while everyone else is financing cars, phones, and lifestyles that drain their accounts month after month. Most people think being responsible with money simply means paying bills on time and saving whatever happens to be left over. Meanwhile, the wealthy are playing a completely different game. They use every paycheck to buy assets that keep earning long after they've stopped working, and over time, that tiny difference compounds into a gap that's impossible to ignore. My name is Alex, and I spend an unreasonable amount of time studying why some people steadily build real wealth while others work just as hard but never seem to move. If you've ever watched someone who looks completely ordinary on the outside quietly get ahead year after year, you're about to understand what's really happening behind the scenes. In this video, we're breaking down the 15 types of assets that are actually making people rich right now, and how you can start directing your money toward them instead of chasing things that only make you look successful. Asset number 1, brand and goodwill. When most people think about assets, they think about houses, stocks, or maybe a rental property if they're feeling ambitious. But here's the twist. Nobody expects. The most powerful wealth-building asset in the modern economy isn't physical at all. It's your brand and the goodwill behind it. A brand is the story people believe about you or your business. Goodwill is how they feel about that story. And together, they form an asset so valuable that companies can rise, fall, or get acquired purely because of the emotional equity attached to their name. Think about it. A plain black t-shirt is worth $2. Put a Disney logo on it, and suddenly, it sells for 10 times more. Not because the fabric changed, but because the feeling changed. That markup, that's brand. That's goodwill. That's invisible value turning into real money. The Kardashians didn't build billion-dollar empires by inventing the next smartphone. They built a brand so strong that attaching their name to anything, makeup, clothing, apps, instantly moves product. That's the magic of goodwill. People don't just buy what you sell, they buy how you make them feel. And here's the part most people overlook. A strong brand reduces your marketing costs, raises your prices, increases trust, accelerates sales, and creates loyalty you can't buy with ads. The wealthy know that products can be copied, strategies can be reverse engineered, and competitors can always show up. But a brand with real goodwill, that's untouchable. If you want to build wealth that lasts, start building something people remember and something they're grateful exists. Asset number 2, real estate. Real estate is one of those assets everyone thinks they understand, until they actually try to use it to build wealth. Most people treat their home like an investment when, financially speaking, it's usually a liability. It takes money every month and it doesn't pay you back until you sell it. The wealthy don't make that mistake. They focus on one thing, properties that generate income. Because the real power of real estate isn't the dream house or the kitchen renovation. It's the steady, boring, predictable cash flow that shows up every month whether you're working or not. Rent payments, short-term rentals, commercial leases. These are the types of income streams that build wealth quietly in the background. And then there's appreciation. Populations rise, cities grow, land gets more scarce. Over long periods, that upward pressure pushes property values higher almost automatically. The wealthy don't rely on this, but they absolutely benefit from it. Another reason real estate is so powerful: leverage. You can use other people's money, the banks, to buy an asset that someone else pays off for you through rent. Very few assets let you do that safely and consistently. The wealthy also diversify within real estate: residential rentals, office buildings, commercial properties. Land they can hold or develop, each one behaves differently, but they share a common rule. They bring in money every month. If you want wealth that feels stable, tangible, and resistant to inflation, real estate is the asset class that has quietly built fortunes for centuries, and it still works today. Asset number 3, royalties. Royalties are one of the most beautifully unfair assets in the entire financial world. Unfair in the sense that you can do the work once and get paid for it forever. Most people only get paid for the hours they show up. But royalties flip that script completely. A royalty is simple. You create something, a book, a song, a show, an invention, and every time it gets used, sold, streamed, broadcast, or distributed, you get a check. Not a tip, not a one-time fee. A repeating contractual payment tied directly to the value your idea continues to generate. That's why a single hit can change a life. Psy earned millions from one song. Mariah Carey makes around $500,000 every year from a Christmas song recorded decades ago. And the cast of Friends? They still earn up to $20 million each every single year from syndication long after filming ended. Here's the part most people miss. Royalties aren't just entertainment. They apply to any intellectual property you own. Books, software, characters, educational courses, even brand partnerships and licensing deals. Royalties reward leverage. They reward creativity. They reward ownership. And they scale without your time. While most assets depend on markets, trends, or interest rates, royalties depend on something far more durable: human attention. If people keep reading it, watching it, listening to it, or using it, you keep earning. If you want an asset that outlives your effort, outpaces your time, and pays you long after the work is done, royalties are one of the purest forms of wealth creation you can aim for. Asset number 4, patents. Patents are one of the most misunderstood wealth building tools because they don't look like money, they don't sound like money, and they don't act like money until suddenly they do. A patent is essentially a government-backed monopoly on your idea. You invent something, file the paperwork, and now nobody can legally use your invention without paying you. That means every company that wants to manufacture it, improve it, or even incorporate a tiny piece of it must cut you a check. And if they don't, you sue. And courts take patents very, very seriously. This is why a single patent can make someone rich. Not 100 patents. Not a full product line. 1. Slinky Koosh Ball, Big Mouth Billy Bass, the Magic 8. Ball. Simple ideas backed by patents that turned into tens or hundreds of millions in revenue. Patents don't just protect inventions, they protect leverage. They protect the years you spent tinkering, testing, building, and refining. And once approved, they turn into an asset you can license, sell, or build a business around. The wealthy love patents because they scale beautifully. You don't need a factory, you don't need employees, you don't even need to make the product yourself. Someone else does the heavy lifting, and you earn a slice every time one is sold. In a world obsessed with competition, patents give you something priceless: exclusivity, the legal right to own innovation itself. If you want an asset with unlimited upside and protected downside, patents are one of the most powerful tools you can build your wealth on. Asset number 5, index funds and mutual funds. Index funds and mutual funds are the quiet workhorses of wealth building, the asset class that doesn't shout, doesn't sparkle, and doesn't promise overnight miracles. But here's the thing. The wealthy understand. If you give these funds enough time, they do something almost nothing else can match. They win consistently. Instead of betting on a single company, an index fund buys hundreds, sometimes thousands, of them at once. That means if one business collapses, the entire portfolio barely flinches. The losers get replaced, the winners stay, and the machine keeps moving upward over decades. This is why the S&P 500 has been one of the best performing assets in history. It's not sexy, it's not dramatic, but it's relentlessly reliable. And reliability is one of the most underrated wealth multipliers in the world. The wealthy love index funds for 3 reasons. 1. They require zero expertise. You don't need to outsmart hedge funds or beat the market. 2. They compound automatically. Every dividend reinvested becomes another building block in your stack of wealth. 3. They outperform most active traders. Statistically, almost nobody beats index funds long term, not even the pros. Mutual funds offer similar benefits but are often actively managed, which means higher fees. Index funds flip the script: low cost, low maintenance, high long-term performance. If you want an asset that grows while you sleep, doesn't require constant monitoring, and has decades of data proving it works, index funds are the closest thing to a cheat code regular people will ever get. Asset number 6, raw materials and commodities. Raw materials and commodities are some of the oldest wealth-building assets on the planet, and they still quietly make the rich even richer. gold, oil, natural gas, agricultural products, rare metals, even certain currencies. These aren't just things. They're foundations of entire economies. And the wealthy know that when you own the foundation, you never run out of demand. Commodities behave differently from stocks or real estate. They don't pay dividends, and they don't send monthly rent checks. Instead, they rise and fall based on global demand, scarcity, geopolitical tension, and market cycles. When you understand those cycles, or position yourself during the quiet periods, the returns can be massive. Gold, for example, has risen over 200% in the last 15 years, not because it creates value, but because people trust it during chaos. It's a hedge, a store of value, and a safe place to hide when the financial world starts shaking. Art is another overlooked commodity. Wealthy families aren't buying multi-million-dollar paintings just to decorate a hallway. Art has outperformed the S&P 500 for 2 decades because it's scarce, culturally valuable, and consistently appreciated by those who can afford to pay for it. Vintage cars, high-end watches, and rare collectibles work the same way, but only if you understand the market. If you don't, they can burn you just as fast as they enrich you. That's the rule. Never invest in what you don't understand. But when you do understand commodities, they become one of the most powerful diversification tools you can add to your wealth strategy. Asset number 7, people, talent, and teams. People are the most underrated asset in business, mostly because they don't show up on a balance sheet the way buildings or equipment do. But here's the truth the wealthy understand. Every world-class company is built on the backs of world-class people. Ideas don't scale themselves. Systems don't build themselves. Innovation doesn't appear out of thin air. People make it all happen. A single hire can change the entire trajectory of a business. Look at Apple. Replacing Steve Jobs with a Pepsi executive nearly destroyed the company. Bringing Jobs back and surrounding him with the right designers and engineers turned Apple into a trillion-dollar empire. Or consider Jony Ive, whose product designs ended up in the hands of billions. That's the power of one person. The wealthy know that teams are leverage. Good teams execute. Great teams innovate. Exceptional teams build things that outlive the founder. This is why big companies sometimes buy entire startups just to acquire the people. It's called an acqui-hire. The code or the product isn't the prize, the talent is. And here's the part most people miss. You can become this kind of asset. The more irreplaceable your skills, thinking, decision-making, or leadership become, the more valuable you are to any organization, including your own, if you run a business. Assets generate returns. And the right people? They generate results, breakthroughs, and entire wealth systems. If you want to build something meaningful, surround yourself with people who amplify your strengths and free you from your weaknesses. That's how the wealthy scale. Not by doing more, but by empowering the right people. Asset number 8, trademarks. Trademarks are one of those assets that seem simple on the surface, a logo here, a phrase there, but behind the scenes, they're pure economic power. A trademark doesn't protect a product, it protects identity, and in a world drowning in choices, identity is everything. A trademark turns a name, a logo, a slogan, or even a sound into something you own. Not kind of own, not usually own, legally owned. Which means anyone who wants to use it commercially has to pay you, license it from you, or face a legal team that will ruin their week. One of the most legendary examples is Michael Buffer's famous catchphrase, the one you can hear in your head right now. He trademarked it in 1992, and to this day, every time it's used in a commercial setting, someone writes him a check. That one line has earned him over $400 million from a sentence. But trademarks aren't just for celebrities or Fortune 500 companies. They protect small businesses, online brands, creators, agencies, anyone who builds something the market recognizes. Once registered, a trademark becomes a real asset you can license, sell, or enforce, and its value grows as your brand grows. And here's the dark side. Counterfeiters and copycats will always exist. Entire industries in certain countries run on intellectual property theft. That's why the wealthy lock down trademarks early before someone else tries to profit off their reputation. A strong trademark is more than protection. It's leverage, it's brand equity, and it's often the first step in turning a simple idea into a scalable business. Asset number 9, stocks. Stocks are one of the simplest assets to understand, yet one of the most misunderstood. A stock isn't just a lottery ticket or a number on a screen, it's ownership. When you buy a share of a company, you literally own a piece of that business. If the business grows, becomes more valuable, expands, or increases profits, your piece becomes more valuable too. That's the core engine behind stock-based wealth. But here's where people get it wrong. They treat stocks like a casino. They chase hype, jump in and out, react to headlines, and try to beat the pros. The wealthy don't play that game. They think long-term. They choose businesses with real strengths, real earnings, and real durability. Then they let time do the heavy lifting. The magic of stocks comes from a single idea: compounding. A good business reinvests profits into more growth. A good shareholder does the same. Over years, that snowball effect can turn steady growth into life-changing returns. Stocks also give regular people access to companies that would otherwise be impossible to participate in. Tech giants, global brands, innovative startups, entire industries. You don't need millions to own part of a world-class business. You just need patience and perspective. The wealthy love stocks because they're scalable, flexible, and historically, one of the strongest wealth-building vehicles when used responsibly. You don't need to predict the next big winner. You just need to understand this. Ownership grows wealth, and stocks offer ownership in the strongest businesses on earth. Asset number 10, cashable liquidity reserves. Cash is the most underrated asset in the world, mostly because people only think of it as money sitting around. But wealthy people know cash isn't just money. Cash is speed. Cash is power. Cash is option-taking ability. And those three things compound far faster than most investments. A lot of people assume the rich keep cash because they're conservative or scared of risk, not even close. They keep cash because opportunities don't wait. When a business goes on sale, when a property drops in price, when a once-in-a-lifetime deal shows up, cash decides who moves and who watches from the sidelines. If the opportunity of your dreams appears and you can't take it, the regret alone is a cost. Cash also buys discounts. Straight cash deals get better pricing, faster closings, and special terms that banks can't compete with. That alone can create returns far above what the bank pays in interest. There's also a lesser-known side of cash: lending. Peer-to-peer lending platforms allow you to lend directly to borrowers at interest rates dramatically higher than the sub 1% most banks offer. But, and this is important, higher returns come with higher risk. The wealthy approach these tools with logic, not emotion. And yes, cash loses value to inflation, but that's not why the wealthy hold it. They hold it because liquidity is an asset. Cash is fuel. Cash is flexibility. Cash is the difference between reacting to opportunities and capturing them. In the right hands, cash isn't idle. It's preparation. Asset number 11, equipment that generates income. Most people think of equipment as stuff you buy, use for a while, and eventually replace. But the wealthy see equipment differently. They see it as an income engine, a tool that turns time, skill, or opportunity into money. And the moment a piece of equipment starts producing cash instead of consuming it, it becomes a real asset. If you're a farmer, a tractor isn't just a machine. It's the force multiplier that lets you produce far more than you could by hand. If you're a programmer, your laptop isn't just a purchase. It's the tool that builds products, writes code, and generates revenue. If you're an Uber driver, the car you drive isn't a status symbol. It's your business partner. Here's the simple rule the wealthy follow. If something directly makes money, it's an asset. If it only looks nice or feels nice, it's a liability. The problem is that people blur that line constantly. They buy a luxury car, call it an asset, and convince themselves it was a smart financial move. But unless that car is literally tied to income, deliveries, rentals, rideshare, logistics, it's not paying you. It's draining you. Equipment becomes powerful when it creates leverage. A camera can build a content business. A 3D printer can build a product line. A set of tools can build a contracting company. The wealthy don't buy equipment to feel successful. They buy it to produce, to scale, to multiply effort. If you want equipment to become a true asset, attach it directly to revenue, and watch how quickly it pays for itself. Asset number 12, first mover advantage and proprietary business models. Some assets don't live on a balance sheet. They don't sit in a vault. They don't even look like property in the traditional sense, but they're some of the most valuable assets a business can ever create. I'm talking about first mover advantage and proprietary business models, the invisible engines that let certain companies dominate entire industries before anyone else even knows what's happening. First mover advantage is exactly what it sounds like, being first to solve a problem in a way the market didn't expect. Netflix wasn't the first to rent movies, but they were the first to mail DVDs at scale. Then the first to stream movies before streaming was mainstream. That shift wasn't a product, it was a business model, and it turned them into a giant while Blockbuster watched from the sidelines. Apple's App Store is another example. When they launched it, nobody truly understood how powerful it would become. Today, it's one of the most profitable digital ecosystems ever created, an asset made not from physical goods, but from innovation in distribution. Airbnb disrupted hotels not with buildings, but with a new model for short-term rentals. Gaming companies reinvented profit with microtransactions, a model that now generates billions. Here's the deeper truth. A proprietary model creates a moat around your business. Competitors can copy your product, but copying your system, your ecosystem, your timing, and your network effects, that's a different story. If you want to build wealth that competitors can't erase, innovate in how you make money, not just what you sell. Asset number 13, books, songs, courses, and digital content. Books, songs, courses, and digital content are some of the purest wealth-building assets in existence because they follow the most powerful financial formula ever created. Make it once, sell it forever. Most income in the world is linear. You work an hour, you get paid for that hour. You stop working, the money stops too. But digital content breaks that rule completely. You create something meaningful one time. A book, a song, a training program, a template, a video, a digital tool. And that creation can keep earning for years without requiring more of your time. That's leverage at its finest. A single hit song can change a life. Psy earned millions from Gangnam Style. Mariah Carey makes around $500,000 every year from a Christmas song recorded decades ago. That track alone has brought in more than $60 million, not from performances, not from touring, from ownership of intellectual property. The same applies to authors, educators, filmmakers, designers, and creators. When your work lives in digital form, it scales infinitely. There's no warehouse, no shipping costs, no manufacturing limit. There's only distribution, and the internet handles that for you. And here's the part the wealthy understand. Digital content isn't just a product, it's a system. One good book leads to speaking gigs. One online course leads to brand partnerships. One viral video leads to 1,000 new customers. Digital assets multiply attention, credibility, income, and opportunity long after the original work is done. If you want an asset that turns creativity into recurring income, digital content is one of the most accessible and powerful wealth engines you can build. Asset number 14, unique rights and special legal advantages. Some assets don't look like assets at all, at least not until you realize how much power they create behind the scenes. Unique rights and special legal advantages are exactly that. They're invisible levers that give certain groups, organizations, and businesses financial advantages the rest of the world simply doesn't have access to. And once you understand how these advantages work, a lot of wealth dynamics suddenly make sense. Take Native American tribes in the United States. Through the Indian Gaming Regulatory Act, they hold exclusive rights to operate certain types of gambling enterprises. Casinos, gaming centers, and related operations generate billions, not because these tribes outcompeted the entire industry, but because the law grants them a structurally superior position. That's an asset.
Yeah.
Churches and religious institutions benefit from another form of legal advantage, tax exemption. They can operate businesses, sell merchandise, offer services, and run large-scale events, all without paying a penny in taxes. In many parts of Eastern Europe, churches operate with the efficiency of corporations, but with none of the financial obligations. Art museums, fraternal organizations, academic institutions all benefit from similar structures. These advantages often look like traditions, cultural norms, or historical exceptions, but financially, they function as real, durable assets. Here's the key insight. A unique legal position can outperform an entire business strategy. While most people compete on price, marketing, or skill, Those with structural advantages compete on a completely different playing field, one where the rules are tilted permanently in their favor. If you ever find yourself in a position to secure a unique right, license, or exemption, understand this. It may be one of the most valuable assets you'll ever touch. Asset number 15, bonds. Bonds are probably the least exciting asset on this entire list, and ironically, that's exactly why wealthy people love them. Bonds don't explode in value, they don't make headlines. They don't turn you into an overnight millionaire. What they do offer is something far more underrated: stability, predictability, and guaranteed income. Here's how a bond works in its simplest form. A government or a company needs money. Instead of taking a bank loan, they borrow from you. In return, they agree to pay you interest regularly, monthly, quarterly, or yearly, and then give you your full investment back at a set date. That date might be in 1 year, it might be 30, but the terms are fixed and legally enforceable. Wealthy people use bonds for 3 big reasons. 1, they reduce volatility. When the stock market swings wildly, bonds act like shock absorbers. 2, they provide steady income. Even when markets drop, bonds keep paying. 3, they protect capital. Government bonds especially are among the safest investments on the planet. You won't get rich from bonds alone. That's not their job. Their job is to protect the wealth you've already built and keep your financial foundation stable while your other assets, stocks, businesses, real estate, do the heavy lifting. Bonds are the financial equivalent of a seatbelt. They won't get you to your destination faster. But when the road gets bumpy, you'll be glad you have them. Key takeaways. If you strip everything down, here's the real lesson. Wealth isn't built by income. It's built by ownership. Every asset on this list has one thing in common. It keeps working long after you stop. Some earn a little, some earn a lot, some take time, and some pay instantly. But they all move you in the same direction, toward financial independence. The wealthy don't rely on one asset. They collect them. They stack them. They build a portfolio of income sources, intellectual property, legal advantages, and ownership stakes that quietly compound year after year. And the gap between people who own assets and people who don't get wider every single day. You don't need all 15. You don't even need 5. You just need to start with one. The one that fits your skills, your income, and your stage of life. Because the moment you stop working for money and start building things that make money for you, everything changes. Wealth stops being a dream, it becomes a system. And systems scale in ways that effort never can. Pick an asset, build it well, and let it compound. That's how wealth is built. Quietly, consistently, and long before anyone else notices.